If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry. Good morning, everybody. Welcome back to another live stream. Wow, do we have a lot of stuff to talk about. How are we doing in the chat? How are you guys doing? Let me know, comment. Has it been a tough week for you? Has it been an okay week for you? Has it been a great week for you? Man, this sort of volatility, every time it happens, I sort of like have a moment of like, I'm hoping people are doing okay, because you know what? Every time you get these types of moves in precious metals, every time, a lot of people lose a lot of money. In this live stream, what I'll be doing is I'll talk a little bit about why gold is doing these types of moves. We'll talk about the dollar, the VIX, the stock market. We'll talk about all of this. But real quick, we doing okay? I mean, this is the sort of volatility that really can cause people a lot of pain. So I just want to say, as we get started, please be careful out there. When you get these types of moves, you are seeing incredibly rare volatility. The GVZ is the gold volatility index. It's just monstrous right now. Volatility on gold is at 46. 46. Think if the VIX was at 46. Volatility is really high. And yeah, it's not fun. Got margin called. Sorry to hear that. Yeah, it's a crazy time to be trading gold. So I just want to say, if you are struggling, you are not crazy. This market is crazy. Now, that doesn't excuse, I'll be very real with you. What I'm saying here doesn't excuse if you're blowing accounts. If you're blowing accounts, I say this with love and care. If you are blowing accounts, you're doing something really, really wrong. Now, why? Well, if you are blowing accounts, that means you're exposing your account way too much to market fluctuations. And if you are doing that, this is the Grim Reaper showing up. Gold volatility, or volatility in general, oftentimes exposes people who are being inappropriate with their risk in the markets. Volatility is what blows people up that are inappropriately taking size that is too big in the markets. So again, I'm feeling for those who are learning very hard lessons in this market. There's a lot of people who are losing a lot of money right now, and they're learning what every trader must learn. If you risk too big and volatility spikes, there goes everything you worked for. Doesn't matter if you had a 2-year period before this where you did really well. If your position size is too big and you get caught when the music stops, oh man, doesn't matter how good of a dancer you are, it's over, right? Volatility and position sizing are things that matter arguably more than how good your entries and exits are. Entries and exits are great when you catch good moves. I've said this a million times on my channel. I'm literally having deja vu right now because I've said this so many times. Entries and exits, everyone obsesses over them. What I think you should obsess about is your position sizing and understanding market volatility. If you're having a lot of success when market volatility is low and you're putting on huge trades and you're making massive gains, it's only a matter of time. It is only a matter of time until the market humbles you. There's no easy money or secret money in this market. Big returns in markets come from small ones compounded over many years. Okay. With that said, let's talk about what's going on. There's your fair warning. Please be careful out there, man. I'm telling you. I hate to get comments. I get them way too often. Nick, I blew up all my money. You know, this destroyed me. Look, like, I hate to say this, but you're not special. Unfortunately, that's what happens to a lot of people. They blow up everything in the markets before they accept some of the realities of the markets. Pause and just take a reflective moment. If you're in your first 2 years of trading right now and you're listening to me and you're like, well, I haven't really blown up my money. Well, you could be on the chop block next if you don't start thinking about these things. Position sizing, understanding volatility, understanding drawdowns, realistic expectations in markets. I'm not saying this stuff because it sells my course really well. I don't even sell a course. I'm telling you this stuff because I genuinely love financial markets. I love learning about it. And I hate getting comments and emails of people saying, I blew up all my inheritance money, or I blew up, my family's money, or it's the worst stuff in the world. Don't let it be you. Size down your dang trades. Seriously. Anyways, let's talk about this news. So the Trump administration, and this has been confirmed by Trump himself, saying that Warsh is going to be the Fed chair. Market is reacting to this in perhaps in kind of an interesting way. The dollar index actually moving higher. So we had Kevin Hassett, we had Rick Reeder, people who were expected to potentially take the Fed chair role, who I suppose, at least in the eyes of the market, I don't know these people's policies that intimately well. Kevin Warsh seems to be the slightly more hawkish. Now, he's not hawkish. Let me take that back. But the market was expecting ultra dove, right? Going to cut rates like crazy. And now the market is getting dove. You see where that works, right? They're saying, oh, okay, so we're going to get a dovish Fed chair. Maybe not a ultra 37 more ultra dovish Fed chairs. Okay. Markets trade on expectations. They trade on, so the market expected a very, very dovish selection. And we got one, just maybe not the ultimate example. And so gold and so dollar spiked. Why is this ripping through the precious metals market? Because the precious metals market is Snoop Dogging it up. Oh, that's how high it is right now. Okay. It is, unbelievably extended. And so when you have an event that threatens even just a slight bit of hawkishness or changes the dynamic, it throws a wrench in things. I'm feeling in the last 24 hours in my gold trade has been a weird one. I did close out of the trade only to watch it shoot back up and then now crater back through. I'm feeling really grateful that I just stuck to my rules. Yesterday, I was flooded with comments teasing. And again, let me take that back. I had a remarkably positive response from the community, and I want to thank everybody who did that. That was awesome. This was kind of a crazy thing to be sharing online. Like, the numbers were insane. The move, I had so many people sending me comments and DMs and messages and emails. Nick, you should have closed out of gold. You should be doing this. You should do that. And I did my very best to tune out the noise and to stick to my plan, because you know what? That's the only reason I was in this trade in the first place. But yesterday, as you might expect, this is social media 101. I had a bunch of people telling me, you should have known the top was in when you had this candlestick, or you should have known. And I know some of you guys just rolled your eyes with me. But oh my gosh, yesterday I got like several people DMing me and commenting like, Nick, when you see that candle and you're making a video about how extended it is, you should have known it's time to take your profits there. And to that, I say in response, first, I roll my eyes because hindsight is such a irritating, like, nagging thing when people have the benefit of hindsight and they're like, you should have closed it right there. I'm like, well, yeah, duh. I wish I did. But the other thing is, if you know, people are saying like, oh, it's clearly overextended, you should have sold at the top. And I'm like, yo, if I had closed this position when I thought it was extended, I would have closed it here. Okay. Trailing stops means trailing stops. I trail a stop, it goes higher. Oh my gosh. All right. I'm going to trail a stop again, right? Trail a stop. These gray lines were areas where I trailed a stop. At every point in this trailing stop point, my head was like, yeah, it's going to turn around. It's done. It's overextended. Like it's going to reverse. And every time until this latest one, it proved to be the wrong thing to do to take profits, right? So anyways, you can tell I was triggered by it. Not actually, because I'd get that every time I ever have a trade and someone tells me you should have closed at the top. It's so obvious. And it's like, all right, well, I'll pull up your YouTube channel. We'll see how perfect you do it. You know, it's like a little bit, you know, I think it's rage bait, to be honest. I think people do it on purpose. I don't know. Anyways, we've got PPI coming out in just a few minutes. This also could cause some serious volatility in the precious metal space. The Fed Chair Warsh definitely perceived as more of a dovish. More of a, I'm not going to say hawkish, but less dovish than previously expected, causing a overnight surge in gold or to the downside in gold. Why? Why is silver down 14% in a day? It's because implied volatility on these things are massive. There's so much, you know, call volume, put volume. There's so much volatility and volume trading. The SLV was the highest traded volume ETF, I think, in the last several days. It doesn't usually happen. Usually that's going to be your SPY, right? You're going to have the S&P 500 be the biggest one, which it naturally is. In the last few days has been silver because there's been so much pandemonium buying and freak out buying. And so, you know, I've held on to this one as tight as I could, but it was time to let it go when we broke through that structure. And I'm feeling really grateful that I stopped out when I did, because I would have given back a whole nother chunk of those gains. And if I had not moved my stop loss to this point, I would have gotten stopped out overnight here, right? So did I play it perfectly? No, but I did the very best I could with it. And I'm pretty proud of how that trade turned out. And I won't do anything different the next time. That is it. That was what I'm looking for in my trading. Anyways, we've got 1 minute to go here before we get producer price index numbers. I'm very curious to see how this impacts markets. It has potential. Last time we had a hot PPI. Let's see if we get another one. If it goes cool, actually, I'll say this. Gold is getting a +4 reading. You get a really cool PPI print, I could actually get a bullish reading back on gold. I'll explain that in a second. We don't have time to do it just yet, but let's see what this PPI number comes out to be. Where am I at? I'm at here. Yeah, Friday. Okay. PPI, we got 40 seconds. Let me switch this to the 1-day view because this is going to bother me. Can I just reset this? How do I do just today? No time. I'm out of time. Hold on. Let me switch over here. Take a look at the all markets view. Got about 30 seconds to go. PPI number, producer price index. This is going to be taking a look at inflation up the chain. Trueflation has been really low. I'd love to see it form in the PPI. If the PPI number comes in really low, I could look at potentially getting back in, establishing a position on gold. We'll see. I'm a swing trader, so I'm not going to have to make any instantaneous decisions here. PPI is coming out here in just a moment. Let's see what we get. Dollar index initially moving just timidly higher here. S&P 500 taking on a little bit of water. Gold coming in. Really not big moves here, though. I'm going to guess that that's likely a on-target PPI number. PPI month over month was hot. Core PPI was hot. GDP. Oh, that's CAD. Okay, so, and I don't know why Forex Factory doesn't do this. They don't report the year-over-year number. Okay, it was actually higher than expected, though. So hold on. Let me check this out. So if I go economic calendar, producer price index, PPI year-over-year, 3%. Am I looking at the right thing? Yes, I am. PPI year over year came in at 3%. That's higher than expected at 2.7%. So it's the same number as last time. So, yep, 3%. Producer price index month over month did come in higher than expected. Core, 3.3%. Conflicting views to the trueflation stuff that we were talking about. Let's see what my friend Chris Pulver has to say on this. We were talking about this a little bit yesterday, this trueflation. So producer price index coming in a little bit higher than expected, putting more pressure on this gold move. And we are completely doing a 180 in regards to gold right now. People have been asking me constantly, Nick, are you getting back into the gold trade? And in terms of, my trading, short-term trading, I'm gonna watch and wait. I need a better reading on the Edge Finder personally. If you know my strategy well, that's what I'm looking for. But not quite. We'll bring in Chris Pulver to the conversation, see what he has to say about all this. And just as a reminder, this scorecard, what it does is it looks at economic growth, inflation, jobs market statistics, institutional activity, technical trends to build an overall bias. So when people ask me, Nick, are you getting back into gold? The answer for me is going to remain not just yet. We're getting a neutral reading on Edge Finder. Fundamentals are very mixed. And I'll explain that really quick here. We have a jobs market bias that is very bullish. So if we take a look at this, non-farm payroll, we'll get new data, by the way, next week. But NFP came in worse than expected. That's bullish for gold. Unemployment rate came in better than expected. That's not so good for gold. Remember, gold likes weak jobs numbers. Weekly jobless claims missed expectations slightly this week. That's bullish. For gold, ADP bullish. JOLTS job openings bullish. So some weak jobs data has produced a strong reading for gold. I think that's a good portion. But then what's problematic is you have a rise in the year yield recently that's be perceived as bear. The producer price index coming in at 3% on the dot there, compared to forecasts of 2.7. You do have some just slightly uptick in inflation. So this plus economic growth, which has been actually kind of strong, services PMIs, GDP growth, retail sales coming in stronger than expected. It paints this sort of neutral look for me on gold. And when we talk to Chris here, he's just pulled up. Hey, Chris, how are you?
Morning.
Hey, good morning. So if we're talking to someone like Chris, Chris and I have different styles of trading, although we have similar ways of looking at the markets. Our execution might be a little bit different. So for me personally, I need a strong reading on that economic data to factor in a short-term trade with a tight stop loss. But Chris, you do things a little bit differently. How are you looking at this gold move? We talked about it yesterday. We were praying for that pullback. It's enough to start seeing something, or are you looking for more?
I think we're gonna have more. I think we should have more. Based on the technicals, if you can keep the chart if you want. Perfect. You don't have any moving averages up there, but the 200-day moving average. Let me get the number. 200-day moving average is
3,800 or so.
Yeah, let's go XAU. We're talking 38.85.
Okay.
Look, I'm just saying that's the value right now. I mean, obviously, what this can be doing is this is like a big old shakeout.
Mm-hmm.
If we break the highs, it's noise. If we have a lower high to lower low, this is going to start making its way back down. 4,000-ish would be a great spot. So I'm just leveling in. I got a chunk in yesterday that's going to be slightly upside down, but that's fine. I'm really just kind of building my way back up to about. I'm wanting to get to like a 10% allocation to gold, and right now I'm like 1.5. I want to get to like 5, and I'm going to try to get to 10. Anyway, it's got to start somewhere. I don't know if I said this yesterday on the live session, but I mentioned it in some of my other sessions. I said that the gold and silver trade was kind of the granny indicator yesterday because my fiance's grandmother asked about silver. It would have been Wednesday night. Asked about like, is silver a good investment? And I was like, this has to be the top.
Right.
And what happened yesterday is just timing. A crazy like 12% correction.
Also, Chris, I think you use EMAs, right?
EMAs, yeah. So it's a little bit tighter for price, a little bit less lag.
So yesterday I featured a little bit of our conversation in my daily analysis video.
Okay.
And you mentioned that, gold at one point had reached the most extreme distance from the 200-day moving average
Yes.
that you could possibly remember. You
Yep.
mentioned 30%, but you're using EMAs, which is here. I just wanted to show you how insanely overstretched, insane we were yesterday from the 200-day simple moving average
Yep.
at the extreme intraday high of gold. Ready for this? We were 48% away from the 200-day moving average. Now, I guess if you're going the other way, that's about a 32.5%.
Yep.
That's insane.
That's the way I measure is like the way down. It's like, oh,
Right.
it's a 32% correction back to that simple moving average.
Yeah. So just a wild, wild move here in the last few months on gold. And people have instantly kind of flooded my comments with, because I mentioned, I commented to you as well. I'm out of the gold trade for now, resetting and looking for another setup. But this chart looks so extended that from the sidelines, it's like, all right, I think we may have just had kind of this melt up. And you said it yesterday, the V-shaped move up can also, or the V shape at the top could take place. And you could very well have gold pull back all the way to that level you just said, like the 4,000 level. That could happen, and we could still be in a secular overall longer term upward trend in precious metals.
Yeah, I mean, if you remember the October 10th, November 20th, I mean, we talked about October 10th, like coming into that 50-day moving average with the S&P. We had gone, 150, 200 bars away from that. It's one of the longest stretches, blah, blah, blah. And what did it do? It darn near hit it in one day. So I'm not saying that that's going to happen with a 200-day, but it's like price is clearly reverting or trying to. It's like, I just think it's looking at this noise at the top. It's an effort. It's an effort for the market to be like, okay, we acknowledge we're 30+% overstretched. We acknowledge the blow off top of the capitulation move. And so whether it's heavy profit taking, whether it's just noise and overstretched, whether it's some other catalyst the market latches onto why gold's going to fall, I have no idea. I do expect, though, that type of volatility in gold and silver could have some ripples in the equities market, at least to shake things up a little bit, because everyone's been loving the the gains on gold and silver. I mean, I don't know. Yesterday was a crazy day. I mean, we finished kind of flat for the day, despite the market being down 1.5% intraday. And so today's just a way to finish up the month. Now, I do have an interesting stat. If we finish January positive, the market tends to be, I mean, it's like obviously more bullish if we finish January positive. If we don't, the market pretty much finishes flat for the entire year.
Yeah.
So it's kind of a big deal to see how we close today to make sure, like, well, if January closes in green, that's a good thing.
Yeah, and it's looking like we most likely will for the S&P 500. NASDAQ has also, eked out a little bit of a gain here as well. Dow Jones looking okay. And Russell definitely coming out of the gate, at least the winner. I did trail out intraday of my Russell long position. I did have a trade going on this one that did also really well, but did get wicked out of that one here this morning. So out of the Russell trade, I would love to look for another opportunity to trade it. Just going to take my profits there and see if we get a little bit more of a pullback. We might. So we'll see. But overall, NASDAQ's down 0.7% here this morning. S&P 500 down 0.5%. Russell's down 0.9%. Dow down 0.4%. Of course, the big movers today, silver down 14.5%, copper down 4.4%. And it is the question of the day. It's like, in the last few months, if you've had big down days, you've been rewarded to step in and buy those dips. But the question is, does that theme hold up here following such a wild one-directional thrust that we had in precious metals? Of course, today's sell-off, one of the supposed triggers for this is, of course, Kevin Warsh actually looking to become the next Fed chair. So we've seen volatility even in that prediction market world. People thought it was Hassett, then they thought it was Rick Reeder. I thought it was going to be Rick Reeder just based on probabilities for a minute there, and then boom, went right to
flipped
Kevin
hard
Warsh.
yesterday. Yeah. I mean, Trump officially nominated him this morning, according to news outlets. So Kevin Warsh, and I look to see, like, what are the pros, cons. Kevin Warsh, it seems like he's a little bit more contentious than other Fed chairs. I don't think it was Trump that necessarily decided that Kevin Warsh is the guy. I feel like it was maybe Scott Bessent that said he's the guy. And
Yeah,
what that means
Scott
for the Fed
Bessent,
ultimately, I don't really know. I mean, I don't know. I think that the reason everything was so muted on Wednesday was I think it's been shown that with the with the adversity between Trump and the Fed, and Powell at least, that Powell's kind of a lame duck for the next couple of months. There's no real decisions coming from the Fed in the next couple of months. But the markets tend to always test a new Fed. So whatever that looks like, I mean, I still think we need to be ready for some type of pullback. Maybe 5 to 10% is a real thing. But I could see it with the market's ability to rally up like it did yesterday. I mean, clearly, even in a zero DT market here, it's like the buyers are still there. The buyers are still there. Earnings were decent this week. One thing I didn't love today was ExxonMobil. I mean, it's not down a ton. I'm still long ExxonMobil. That's one of my favorite stocks for the year. But yeah, I don't know. I mean, earnings this week, Microsoft down. I had a nice profit trade on Microsoft with butterfly spread. Meta had a really nice outperformance. Tesla was up a little bit, but just fragile stuff. I think the big thing is rotating out of tech, not being tech heavy, getting into the scarcity and the infrastructure side, the physical side of AI. And that theme is going to be what I trade until I see something else. So I'm how bullish are you on small caps right now?
Well, since I took profits on it, so my actual positioning is back down to nothing. I mean, I had a long IWM trade, took profits on that via trailing stop here this morning. The question is, would I jump right back in? So, I mean, I like small caps. I think that there is the longer term story could still be there. The trouble that I'm having is the probabilities for rate cuts. That's kind of a storyline there. I mean, I still like them better than, for example, I still think like small caps is a better pick than tech stocks for the rest of this year.
Sure.
I would go that way, but my overall thought on markets is a little expensive out here. And if I just take a look at, if I look at Russell, where I would kind of draw the errors for me, or the problems with me, it would be, all right, inflation showing some stickiness. I know we did look at the true-flation, but PPI came in this morning, 3%, little sticky inflation. That could put some pressure on yields to the upside, which is being perceived as slightly more bearish for the Russell. So we went from, you can see Edgefinder score over here was looking really positive when I took the trade. And then since then, it's kind of gone into neutral territory. So I'm just going to kind of wait and see what happens. I was really looking to see if we could get some cooler inflation data today. I'd like to see jobs market data strengthen a little bit. I know that, in some ways, the weakening jobs market is helpful to rate cuts, but I would rather have slow rate cuts with a decent hiring environment and just modest inflation and growth, which I think would be an okay spot to be in the Russell, especially when you look at some of the fiscal policy stuff. It does seem like it could favor small cap domestic businesses in America. So I do still like the story, just going to wait for a better setup on the trade side. Bigger picture, I think Russell could be okay.
Yeah, that's fair. Let me just try to get some pullback measurements here. So, I mean, I like the structure of Russell. I think buying dips. I mean, again, you can start anywhere here with dynamic support. I'd love a retest of this like 144 to 200-day moving average. We went back to this last year. I did measure this thing from the COVID low. I mean, go into symmetry, low to high, low to high. I can see Russell up to $300. So I do like buying the dips. All I've been doing thus far is I have shares around 180. I sold those around the all-time highs. Now I'm just sitting on a bunch of puts down here at 170. Yep. So it's an income trade right now. If I want to add more shares, it's going to be on dip. I've got cup and handle measurement at 281. I've got the projected symmetry at $300. I mean, they have to see the benefits of rate cuts and probably just AI working its way into the business for productivity gains.
Yeah, I think that and maybe a little bit more modest valuations than than your tech stuff. And interesting to see the whole Microsoft debacle, right? Because you had essentially still solid earnings numbers overall. It's just the cloud-based revenue not being guided to be, just spectacular, right? So any little hiccup that these types of companies have,
Yeah.
they also increased their expectations for more spending. So adding more spend expectations with slightly slower revenue growth on the AI related stuff, which is what they're spending money on, has the market a little bit nervous. And, just take a look at some of this stuff that's happened in front of us. Oracle from those highs is down 52%. So I would actually say, Chris, like I'm not in bubble territory anymore. It's hard for me to say like, oh yeah, the AI thing is just a giant bubble when Oracle, which is centric to the build out, is down 52%. Right. So like, to me, that makes me a little bit like, okay, valuations, sure, still high. Uh, but bubble territory to me would be looking a little different than this.
I agree. I also look at Oracle and I'm like, I don't want to touch that.
Yeah, me too.
I mean, if it's down 52, could it be down 60, 70? The one thing I didn't love about Oracle is how quickly they jumped into that was like the first sign. I think that was the one that was downgraded from Barclays because their debt issuance was just off the charts for what they bring in revenue wise. So, I don't know. I mean, Microsoft to me is different. I mean, I just look back to see what 2022 was. Microsoft was only down. Meta was down 75% during 2022's pullback. Microsoft down 37.
Yeah.
So what I'm doing on Microsoft is here are these recent highs. I had a nice butterfly spread that trapped it in about 425, so that was a good spot yesterday. But here, if we come back to the Liberation Day lows, that's a 38% correction. Even if this is let's say this is a head and shoulders here, Nick. Let's say we go test this level. This is a big topping pattern. Well, we still play here for a while. And so if there's room to come down, like I want to get a trade in that's going to be forgiving down here. If I'm going to own some shares, let's own it at 37% off. If we get back to highs, you're getting like 50+% to the upside. And this could also be just a trend. It doesn't have to be a topping pattern. We could find support, work its way back to highs again. And Microsoft is, in the AI space. It's big tech. They buy companies every single day. We'll see. But for right now, it's income, dude. It's income.
Oh, yeah. Take a look at while you're on that subject, IGV, right? So I know we talked about this. The options market there's not great options for IGV, but I have been keeping an eye on this one because software is just getting hit like it's a bear market here. It's kind of crazy. But just wondering your thoughts on this. I was looking at this and it's like if it maybe drops down into like the 80 to 77.5 mark. I'm, a longer term investor when it comes to software stuff. I don't think that AI is going to completely wax everything software up and down the whole software infrastructure world. I think that there is a potential to look at these and say there's some wonderful companies in there that are going to get kind of thrown out with the bathwater. That's my opinion. If we were to see, that would be down to that 77 to 80 mark. That's about a 35% correction in software names, and to me, that's where I start getting a little interested.
What is the what's the makeup of this? I mean, software companies. I mean, how many are we talking? Are they big? I mean, this is a BlackRock ETF.
There's a lot. It's big stuff. You got Salesforce, Adobe, Microsoft, ServiceNow, all the software names.
Okay,
just a huge basket of them.
Okay. I'm going to rank this lower than my desire for anything physical scarcity wise. I'd rather go the physical energy side of AI versus the software side. I think software's had its day in the sun. I think software was easy money for a while. I think AI now is disruptive enough that, I mean, look, you don't sit here and hang on to it like, oh, I'm married to this position. What you're going to do is you'll get a chunk here. You'll stop out if you're wrong. If you're right, you get all that upside and you'll ride it like a pro. So I'm not worried about I'm worried more like for myself. If I started here and I'm like, well, my plan B is to get out of this trade. It's like, I don't want to see a 47% correction like this. And all of a sudden we're, back down to 2022 lows and I'm stuck in a trade that has no options.
Right.
Or has limited optionality.
The way I'd play this one, Chris, would probably not be a trade. It would definitely be more of a dollar cost average type of thing.
Okay.
So I would probably start building something if we did get down into those levels. But what that would probably take to get us down into those lower levels would probably be the broader market having a a bit more of a sell off than where we're at. It's
Sure.
amazing that software. It's like you said, it's had maybe its day in the sun, and it's very easily being squashed by the semiconductors part of the tech trade, which is just unbelievably strong here. By the way, gold now down 7% on the day. Silver down 16. My goodness, we're getting some fresh selling here.
This has to bleed into. I mean, I think that gold and silver took a lot of the oxygen out of the S&P and the Nasdaq these last, let's say the last month, let alone the last couple of weeks. I just wonder, like, what does it mean when we have a potential like 10, 12, 15, 20% correction? Does that do anything to the S&P at all? Anything to the dollar? It's like those correlations. It's just high volatility will make your head spin, man.
Yeah, and that's of course kind of coming through the follow through of PPI coming in a little higher than expected, up the supply chain. That's going to be your wholesale prices coming in a little bit sticky compared to expectations, triggering that in combination with the Kevin Warsh. This just goes to show you when you get really, really extended like this, it just takes a little bit of a flame to light the whole gas tank on fire, right? That's how dangerous it can get. By the way, just a quick shout out, Fire Samurai. Thank you very much for becoming a channel member. Appreciate you for supporting us here on the Daily Show. Hope you guys at home are grabbing your cup of coffee and joining us each day. We're here Monday through Friday, just talking markets and doing what we love here. So thanks for being here and thanks for the support. We'll see. We've got U.S. stock market open up in 40 minutes from now. Unbelievable to see silver make this kind of percentage move. These spot price moves are unprecedented. I just have to say, for a 24-hour period, for spot price of gold to move $660, unprecedented. And especially, intraday, you had that move and then went all the way back up and all the way down. I mean, these spot price distances are just completely unprecedented. Now, the percentage moves have happened before, and we can go back and forth on whether or not this is a buyable dip or not. But I would say that the volatility is something that people should be thinking about more. Chris, I don't know if we talked about this yesterday. GVZ, have you been looking at this at all?
Not yet. No.
Gold
GVZ?
Volatility Index.
Oh, geez. Yeah.
46, right? That's think of that on S&P, right? 46 VIX. That's a 46 for gold. Crazy.
Even in Tasty's IVX or their IV rank, which is their kind of proprietary. I mean, GLD is at 115. I mean, usually IV rank on the S&P is like 15. 115, and silver's been the same thing. So when I saw that yesterday, I was like, let me see if I can get a little ratio spread going on GLD. It was garbage. I was going to do like a 320 by 310. It's kind of like a naked put. It was offered me like $1. I'm like, I'm just going to dollar cost average in.
Wow, interesting. I'm surprised.
I mean, I could just do a naked put, but it's like I like ratio spread so I can kind of build out a buffer. Here's an example. If I do, let's go GLD. It is volatile. I mean, basically, it's expensive to buy, it's expensive to protect, and that's kind of where traders are stuck right now. So, which I think that's all the reason for more unwinding, where this kind of gets a little bit gnarlier to the downside, just because if it's like, well, I can't really buy puts because it's super expensive, and people aren't going to use more options to do like, I mean, butterfly spreads are cheap. You can do a butterfly, but it's like then you have to time it perfectly, and that's really challenging. So anyway, I think people are just going to like dump out. I think this is certainly going to shake up some loose hands. Keep in mind though, who's going to keep buying gold? Central banks. So I mean, all in all, it's like don't let this rattle you as far as like a bigger picture narrative. I mean, there's technicians making arguments that there's not enough upside targets as far as like the asymmetry is now to the downside. The risk is that, I mean, sure, in the near term it is, but I mean, if we pull right back to like I'm looking at GLD for shares, but if we pull back to 400 or 360, or we look at the spot price, I mean, this is just one leg. So if this is high, low, lower, high, lower, low, well, everyone's going to see this trend line and be like, buy it here. Now, maybe that goes up, but if it stays lower than this level, there's another big break coming, and we measure it. Like you take this whole swing, you take this whole measure move, and you're talking right back where I said, which is the 200-day moving average and previous highs. I just, at the end of this, like, as wild as this is, I'm hoping that traders can look at this chart and learn, like, wow, technical analysis really matters, because we can actually find some levels where this thing could project, settlement.
Yeah, and to me, it was a weird feeling yesterday, Chris, because I watched as I got trailed out of this trade, right? I got nailed out of the stop loss and watched. I felt like an idiot about 30, 45 minutes later.
Because it was wick, like all wick, and it was back up where it
Yeah,
started.
I got whipped out of there. Fortunately, I looked at it. Thank goodness. I don't know how. I mean, well, I guess I did. It was during market hours, so there's plenty of liquidity in there.
Yeah.
I didn't get any slippage, which I was like, thank God.
Right.
Because that would have been really annoying.
On the stop, you're saying?
Yeah, because the move was so fast, right? The
Yeah.
move was, we were down. I mean, this was like a flash crash intraday. And so I got stopped out like right there, which was nice. And then felt like kind of dumb afterwards, but I made a video on Instagram. I was like, you know what? Hey, you can always kind of look in hindsight and beat yourself up about what you shoulda, coulda, woulda done. Now I'm feeling like, hey, you know what? I did the right thing. Obviously with hindsight now in our favor, it's like the gold kept going lower. And so I would have stopped out if I had not trailed my stop tighter. So I felt like I did the right thing with keeping my stop relatively tight, even though it didn't feel tight, even though we, had that huge move. I still just kept trailing with structure. But to your point about how critical technical analysis can be, it's like as soon as you sort of lost that level, that intraday pause and where we jump started up into the stratospheric levels, as soon as you lost that, it's like, we could waterfall here, Chris. I mean, going exactly, I mean, that might go down in time here. What you said yesterday, the warning about a V top could literally go down as, the kind of warning before the V top. It's just goes to show how quick these things can change on a dime. They can change margin requirements on futures. They can they
have three or four times, I think.
They have.
Right?
And so
it's not stopping it yet, but
something just smack it. It's not like a stock where a stock produces earnings. It's as you pointed out yesterday when you were talking about commodities, they're just commodities. People, they don't trade the same way as a stock share, and they can have V-shape moves. I'm not necessarily calling for that, and I know you aren't either, but it's just a fair warning to people who are looking at this. It doesn't have to do anything. It can do insane moves to the downside right after this.
All right. I think my dog is officially disrupting this broadcast today. Sorry.
No worries.
Yeah, like 2026 will give us stuff to talk about. It could be gold, it could be silver. It has been so far. It still will be. I'm pretty sure, Nick, it's one of the most overstretched moves I've seen on gold. Going back to the longest bar count that I've seen in a long time, going back to one of the highest percentage moves I've seen in a long time. So would it surprise us that we have the fastest correction? Probably not. But like I said, don't let that change the overall structure. I think with the gold and silver ratio, gold is a better trade, as you can see right here. Like gold is a better trade to time. Gold's a better thing to outperform, at least in the near term. Look, at this point, like my mindset is kind of, I'm done with silver. Silver ballistic. I just saw a podcast like somebody's predicting silver at $500. I'm like, okay. Is this the Peter Schiff of silver? I have no idea.
It makes me nervous.
But it's like with this historical ratio, I'm like, I just think the trade needs some normalcy. And I just feel like, look, gold's at all-time highs too, but net long, gold has way more support globally than silver. Silver has a use case, which is awesome. And silver is, and I said this when we broke the highs at 45 and 50, I'm like, silver is not just a poor man's gold. It's now seen as an industrial case and a strategic metal for national security and AI. So I get why silver has done what it did as far as we had significant all-time highs at $50, 1980 and 2011. And when we blew through those levels and doubled above that, I'm like, okay, that's great. But now what? Does it just keep going? I don't know.
Right.
Not without some noise.
Chris, we talked about this a little bit, I think yesterday or the day before when we were chatting about it. But I was telling you, I've just been keeping up with the physical gold and silver dealers a little bit, just hearing what they have to say. Because it is pandemonium out there. Because you have to think about this for a second. Imagine you're a physical gold dealer. Like there are shops that sell this stuff. They buy the stuff from the public. They they are the physical merchants of gold and silver because people like to invest in it. They like to, cash out of it someday. Well, the reason it is insanity out there is that if you were picture yourself, you run a gold and silver shop, and there's some very nice people who do these sort of things. And imagine you're the gold and silver shop owner, and yesterday people are flooding into your store saying, I've held on to this stuff for 20 years and I want to sell you all of my silver. And you, as a logical business, they're not in the business of speculating what spot price does. They're in the business of providing people a place to sell their silver and also a place to buy silver or buy gold, etc. Anyways, imagine being in the shop right now. That's scary. If you had to buy, $500,000 worth of silver in the last few weeks, and it's doing this, you're like, if this goes, you could get crushed. So,
well, I mean, a lot of them too. Well, at least in the comic side, a lot of the holders are hedging, at least in some capacity.
Yeah.
The crazy part is right now the kind of pandemonium mania in gold and silver is selling it, not buying it. Like what's happened is not a lot of people are rushing to buy this stuff, and that's why I keep going to like the net long of central banks. Position wise, I'm sure if this is going to give central banks a chance to buy more, they will buy more. Even if we have a 20 to 30% correction, they'll buy more. But people now that have been sitting on gold and silver feeling, I mean, I had a guy that trades with me every single day. He just, I don't know, found 975 ounces of silver in his house, and he's cashing in for about 100 grand. It's like, he's been sitting on that for like 10 plus years. So it all of a sudden got exciting. And good. Like, but I think that's where the noise is everyone is coming to sell. They've been sitting on it. My coins, my this. I mean, I have no idea. I have limited interest in like selling the physical side. I'm like, I'll hang on to it. That's the whole reason I bought it, was to hang on to it.
Same here. And for listeners, I would encourage you to go check out some of these channels. What you will find is most of them are saying the same thing. The physical gold and silver dealers are being flooded with people coming in to sell. Now, that doesn't necessarily mean that in the broader sense, there's more selling going on than buying, because the physical world's a little bit different than the paper world. And the central bank world is different than the retail trader who's been sitting on it, for a retail investor who's, grandma left them 500 ounces of silver. Like it's kind of different, but it is just a thing to keep an eye on, because it's kind of an interesting story. Anyways, Chris, we are over time here. I know you got your next thing to head to, and we've got our next show host here ready to go. So thank you for joining and sharing all the wisdom here on this crazy precious metals world stuff here with me the last few days.
Of course, we'll keep it going, dude. Thanks.
All right, man. See you. Have a good weekend.
You too.
Up next, guys, we are going to be having Marco take over the stream, sharing a little thoughts and insights on this wild market move that we've got going on right now. Real quick, if you guys don't have access to the Edge Finder, would like to try it out, we'll drop a link here in the live stream chat to where you can try it out for yourself. The tool is, of course, the main purpose of it is to help filter out macro fundamentals in a way that is understandable to the average trader. The cool thing about macro is that it's what moves markets, and it's the stuff that matters the most in markets. It genuinely is what's driving gold and silver to do this stuff in the first place. It's all about macro. But most people struggle with actually having the tools to see what the macro is even telling them in the first place. Here at A1 Trading, that's what we specialize in, and we'd love you to try out or check out the software for yourself. You can get set up with an Edge Finder trial using this link that's been dropped in the live stream chat. And part two to that is that if you apply for that right now, we changed it so that you also receive with that trial a free course from us on how to trade better with Edge Finder. We have people all around the world, thousands of people using Edge Finder to build better insights in their trading through macro fundamentals, made easy for the first time, in my opinion, to the masses in the retail trading space. Macro's everything, but it's no longer something that's only for the hedge fund guys who use it all the time. Now it can be made accessible to the normal traders like us. We can actually start implementing it into our trading. So if you want to make macro more approachable, get yourself an Edge Finder and try it out using the link that's just been dropped in the live stream chat. Up next, Marco from Marco's Trading Journey taking over the show. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to another live stream, basically my segment. So I hope everyone is well. Hello Josh, hello Trent Kid, hello Sluggy, and everyone else, Oatmain, Super Mario. So welcome to the stream. We have some breaking news. New Fed chairman has been announced. So let me try to catch that news. It is, where did I find that? Let's see. Trump, I'm nominating Kevin Warsh to be chairman of the Board of Governors of Federal Reserve System. So Kevin Warsh is the winner. We can go to the poly markets, Fed chair poly market. Let's see. Okay, and the winner is Kevin Warsh. He actually was the leader at one point and then passed by Rick Ryder, who I don't know who is Rick Ryder, but Kevin Warsh, what I know about him, he's essentially kind of an old Wall Street guy, if I got that right. So I'm expecting him to be close to Powell than, let's say, close to Governor Miran, who is just always a dove, always calling for 50 basis point cuts. So this maybe, Rick Ryder is a sick name. It is a sick name. So this new guy may be similar to Powell, because Powell was also kind of in the middle, a bit more neutral, an old, I would say, Wall Street guy. I mean, he definitely had a lot of knowledge on the markets, and he wasn't a straight-on dove. So this may give the markets a bit more confidence. Let's see what is happening. So I do have a trade on the Nikkei, by the way, but the Nikkei chart on Vantage is not working. So I just wanted to show you. So currently I'm in a little bit of profit, while on the Vantage chart, I'm still in a little bit of profit, but for some reason this thing is not moving. So I'm going to have to replace this with the IC markets chart. So I am in this position. It's running a little bit of profit. I'm planning on holding it. I'm planning on using a trailing stop loss. But what I wanted to see is the DXY. So the DXY, 1 hour chart right there. Let's see. Breaking news was, I think it was maybe 1, 2, 3 hours ago, something like that. Not a big reaction to the dollar. So the reaction is pretty minimal. What about the stock market? Possibly this blue candle. Not sure. The reaction is not that big. And what I'm thinking is he's just one guy. So the new governor of the Fed is just going to be one person. The Fed is still a committee of 12 members, okay? Still a committee of 12 members, and they still vote for every single decision. So even if you replace 1 or 2 of the members for super dovish members, you still have 10 members who should be, let's say, neutral, or they should use rational decision-making to become dovish or hawkish, okay? There's just one guy so far that's super pro-Trump and wants 50 basis point cuts. That is basically Governor Miran, I believe. I believe that's the name. So let me just update my charts for a second. I should remove this one on the Nikkei. Do I have anything on it? No, just this reward to risk tool. So let me delete this. Let me add in a JP225 for IC markets. So let's go to plus JP225, IC markets. Okay, let's jump on that. JP225, green flag, which means I'm in a position. Daily chart. I'm just not sure of the date when I took this position. I think it was on Tuesday. Let me check. Let me check in my in the signals page, basically in the A1 Trading Discord, under Marcos Trades in commodity. In index trades, we have the Nikkei signal. So let me take a look at that. Sorry about this. I just want to update the chart because the one on Vantage is clearly not accurate enough. So the entry was 52569. Stop level 50881. And it was on the 26th. So it was, right here. Okay, let's do right here. I think that was kind of it. So we got that resolved. Now, back to the charts. This is what I wanted to show you. This is the only trade that I'm currently in. Nikkei, Japan 225. Again, Japanese stock index. Edgefinder was bullish. Technical analysis was bullish. Daily chart is in an uptrend. We have just touched the 20 MA right there. So I got in right around the 20 MA. And also a big confluence as well was the Sell America narrative. So I know that the Sell America narrative is not really playing out. I mean, if you look at the US stock market, it's not really going down. But the new money that's coming into the markets, it seems to be going into some other assets. And there is definite outperformance of the Nikkei, the DAX, the emerging markets, Brazil, Peru, gold, silver. They definitely are outperforming the S&P. So there is a little bit of a Sell America narrative, but it's not huge. It's not like the end of the world doomsday. Yes, the dollar is losing value, but the dollar is still the reserve currency of the world. So it's still the most important currency, and everything is backed by the US dollar. So if you get some problems in the markets, if you really get a Sell America narrative, you should see this happen on the S&P. And until it happens, we don't have a Sell America narrative. I mean, the Sell America narrative is just talk, mostly talk from the big heads in Davos, from all the a-holes at that Davos meeting, European a-holes. Okay. Now, gold, silver, main story for today. Gold down -6%, silver -15%. Looks crazy. Is this the final pullback? Is this the correction? I think so. Yes. I'm not going to bet on it. I don't want to place a bet on it because the markets have gone erratic. But I do believe that this is the start of a bigger correction. I'm not looking for buy setups on silver or anything. On gold, though, I would look for buy setups. So we are approaching some better levels. We are approaching the 20 MA as well. And if we slow down a bit, if we don't just get a straight red candle through the lows or through the 20 MA, if we get a bit of a slowdown, I'll be pretty happy to try and take a buy position. So that is what I'm watching. That is what is on my watch list. That's my game plan for gold. So silver, I'm just leaving silver alone. But for gold, I'm looking for entries if we go down a bit lower in a bit more of a controlled manner. Now, what I would love to get is an Edgefinder confirmation, of course. Right now, gold is neutral. And what about silver? Silver neutral as well. So I would prefer if we can get a bullish reading right here. So if we jump onto gold and get a bullish reading, that would be a pretty good confluence for me to buy. And that is what I'm looking for. So that is on my radar as far as gold goes. Now, a quick mention of the sponsor of today's video. So if you're looking to get funded, expand your trading capital, DNA Funded is a great option. So this is my new account. I lost the funded account that I had, so now it's phase 1 again. But this is a 25K account, as you can see, phase 1. And of course, I used the code A1Live for 25% off DNA Funded. So this account is not given to me by DNA. I bought this account personally because I want to do this challenge. Of course, I'm doing the challenge with ChatGPT Trade Signals, but I want to show you guys my experience, my journey through it. And I want to tell you about the code that we have, which is A1Live, 25% off, DNA Funded, one of the best prop firms in the game. And with our discount code, you get, I would say, the best price. So if you're looking at all of the big guys that actually do pay out, because most prop firms don't pay you out, if you're looking at the guys that pay you out, DNA gives you the best price, and they're using Trade Locker as an execution software, which in my opinion is the best software in the game as well. So I love using it. It has a built-in risk management calculator. So you no longer need to waste 5 to 10 minutes for taking every single position by using this, okay? See, this is what I have to use for my MetaTrader, but not for my Trade Locker. For Trade Locker, this is all built in, which does save a lot of time. That's about it. If you want to get funded, expand your trading capital, A1Live, 25% off. I highly recommend them. They are a sponsor of this channel, and Nick is, of course, closely working with the company as well. Time for more of my watch list, if I'm being honest. So I didn't go through the full watch list. JP225 is the only trade I have. Aussie dollar. Aussie dollar, I want to get in. I want to buy it. Let me see, has the reading been lost? So it looks like we have a very bullish reading, which is great. Love to see it. I would like to get a pullback to the 20 MA. So I'm watching the 20 MA as a support level. I'm not going to buy at this point. Let me see as far as support and resistance goes. We do have some pretty important resistance at 0.71450. We had some resistance, which is now support at 0.69385. Yeah, if we can pull back maybe to this level of support, let's see. So this is support. If we can pull back to that level and the 20 MA catches up, so the 20 MA starts doing this, I think that's going to be a pretty nice opportunity to get in on a buy setup, and that is on my radar. So that's what I'm watching for the Aussie dollar. Do I have an alert set? I don't for some reason. So let's put on an alert right there. Pound Aussie. I want to sell it, although I'm not sure I will get an entry. I would like to get an entry around the 20 MA. Has the reading changed? Let's take a look at that. Pound Aussie, still a bearish reading, so that's nice. Of course, every single trade that I take, I prefer to have the edge finder in my favor. So I prefer to have a bullish or bearish reading. Pound Aussie, if we pull back to the 20 MA, let's say 20 MA catches up, we pull back to it, sell limit, or market sell, and I'll be in this position. And finally, gold, which I showed you. So gold, I told you the plan. So a bit more of a pullback. I don't want a straight meltdown lower. I want a bit of a slower pullback around the 20 MA, and then it is game on to get in on a buy setup. I still love gold. I still think fundamentally gold is going to go up in 2026. We're getting high inflation. We're getting dovish central banks around the world. We're gonna get more rate cuts from the Fed. Let's see that actually. So we have the new Fed chairman. What happened to the Fed watch tool? What are the probabilities? Let's take a look. So we have 33% chance that there will be 2 rate cuts of 25 basis points by the end of 2026. Okay, that's what we can see right here. So 2 rate cuts, 25 basis points. That's of course bullish for gold. Trump's big beautiful bill, massive printing, massive spending. I still love the story. Sell America narrative. You know, if the sell America narrative continues going, then people are gonna go into gold. If Trump does more stupid things, gold will continue going higher because uncertainty around Trump makes gold go up because it creates a risk-off environment. So that's the watch list. By the way, if you want to get all of my positions, all of my trade signals and full breakdowns, you can join the A1 Trading Discord. Link is in the description of this live stream, and make sure you use the code Marco. I think we have a 40% discount running this month. So code Marco works for the A1 Discord, works for the Edge Finder as well. Make sure you join, and I will see you in the Discord. Now, time for the comments. So let's see what you guys have to say. He still has to get voted in though, and he might not. Okay, that's an interesting thing that I missed. So looks like my research was a bit too sloppy. Looks like he still needs to get voted in, but I'm sure Trump will take care of that, of the voting. The chairman has 1 vote and will need to convince the other 11 members to vote alongside him. Yes, so it's a committee. It's only 1 person. 1 person does not change the full outcome of a Fed interest rate decision. Let's get a Fed chairman who makes the markets exciting. That's a good point. I mean, Powell, I can see that Powell is a very knowledgeable guy. He's a very competent chairman, but he's kind of boring. You know, Trump is super active. I mean, Trump makes stupid decisions, but for us traders, Trump creates volatility. So for traders, Trump is actually good. Powell, I don't know, not so great, because Powell is always like, we might do this, we might do that, we might do this, we might do that, and then he doesn't do anything. Trump is like, we will do 50 things in 3 days, and then he moves the markets like crazy, and then he doesn't do anything, but you get my point. So Trump is much more interesting for us traders. To protect the dollar hedging, you have to go long the other assets, but I will not do it at the moment because Aussie is at all-time high and DXY is at the lows. USD CAD is not similar to Powell. It won't make sense for Trump to put someone similar to Powell. I would say that the new guy is similar to Powell in the sense that he's pretty knowledgeable, he's a good economist, and he knows what he's doing. It's not like Governor Miran, who is just calling for 50 basis point cuts all the time. That's what I mean when I say he's more like Powell. I would say he's not such a puppet for Trump. So if Trump says do 50 basis point cuts, I don't think the new guy will listen. That's what I mean. Look at Russell. Russell, let's take a look. Russell, 2575, 2575. Okay, so looks like Slug is looking at a level to get in on the Russell. I think that's a good decision. What does the Edge Finder say? Let's take a look. Russell is neutral at the moment, but I would say the current market environment favors US small caps. So it favors gold and it favors US small caps, which is exactly what the Russell represents. So 2,000 smaller companies in the US. We are around the 20 MA overall uptrend, of course. The only problem I see with this is that the Edge Finder is giving a neutral reading, which I would like to get a bullish reading for buy setups. But still, I think the current narrative, the current market environment does favor the Russell. So not a bad position, not a bad trade to have. Euro dollar, Visa, oil, Euro yen, Peru. Yeah, Peru is going up, apparently going up in 2025, as well as Brazil. So emerging markets seem to be doing well. And that kind of fits the narrative of Sell America. So money not going into the States so much, but maybe going into some other alternative assets, especially gold and silver. I'm already taking a stab at gold. I think it's too volatile for me. Marco, you should use Google Gemini this time. That's an interesting proposition, but I'm going to stick to the ChatGPT just for the challenge to stay consistent, because I started with ChatGPT. I've been trading with it for 8 months. It's up 30%. So it made 30% in 8 months, and that's not a reason to switch to Google Gemini. But of course, it's just all a challenge. For my YouTube series, it's not really something that I'm putting a lot of money into. It's just a challenge. Let me see what I want to look at gold. So as far as gold goes, I think it's super volatile, and I don't want to touch it at the moment. I kind of want to see what this daily candle does. I want to wait for the weekend. I want to see how Monday opens, what happens on Monday, what happens on Tuesday, what happens after the weekend once all of the investors, big players have sort of digested the information, saw the big pullback, and then made the decision, okay, we're going to pound the sell side on Monday, or we're going to start getting in on some more bids here. I think that should give us more clarity, and it's going to be a bit of a safer entry. Top setups, thoughts on the Fed chair nomination. DAX, I don't think the DAX is doing anything. I mean, I've been watching the DAX, but we did break out of the massive range. That's definitely good. Then we had a pretty big crash lower. So we broke out of the big range, as you can see here. Then we just crashed lower with a lot of selling pressure. So I'm not interested in the DAX. I don't think that the DAX looks good. Marco, but to what extent has Aussie strength been contingent on this gold up move? Well, there is a correlation, absolutely. Aussie has been lagging in 2025, lagging behind gold. Looks like it finally started to break out. We know that Australia's economy is highly dependent on the metals market pricing. So I would like to see the Aussie continue higher, and I think it can continue higher. I think there's sort of a delayed reaction, delayed correlation. I don't think if gold crashes that the Aussie will move much lower. I think the Aussie woke up from a very, very long nap time. So that's what I personally think. If you look at, for example, 2025, for the Aussie dollar, we have mostly been flat. Mostly been flat, mostly been corrective. USD JPY, that's a good one. Forgot about that one. Let's take a look. USD JPY. UJ starting to recover. So UJ starting to move up. I know there's some people catching the bottom here, buying on the bottom. I think Iwend put out a signal in the A1 Discord about buying this bottom, which is an interesting trade. Not the one I'm interested to take, but still an interesting position. I would be kind of scared for the BOJ to go in and do an actual intervention. By the way, if you didn't know, apparently the BOJ still haven't done anything here. This is just weak hands. This is just sort of some panic selling because people were expecting an intervention to happen. If we go back to the 159 or 160 level, then I'll absolutely be interested to sell. I think then the BOJ will come in, they will do an intervention, and they will push the price lower, maybe back to this low. So I'm absolutely interested to get in on a sell setup if we go back to this level. How is this a safe haven asset when the volatility and volume is so extreme like this, huge bumps and dumps? Well, that's a good point. Powell, we have to wait on the data every time. Yeah, it gets boring. It gets pretty boring with Powell. One tweet from Trump, your gold goes up. Brazil is good. Yeah, Brazil is apparently doing pretty well. All of the emerging markets seem to be doing nice. How do you trade with ChatGPT? You can find the full series on it on my YouTube channel. So I made 3 videos already. Part 4 is coming out today. My YouTube channel is Marco's Trading Journey. So let's see the last chart for today. What do we have? What can we find? Let's see. Last chart for today, copper. Copper, that's what I wanted to cover. Copper, I was looking for buy setups, but then we crashed immediately lower, printed a huge wick here. I'm no longer interested to look for buy setups at the moment. I think this is too volatile, too extreme. I need some cleaner price action, and I would need to see this uptrend continue a bit higher for me to look for actual buy setups. So copper is still on the radar, but I want to see the price action clean up. I think copper can be a great substitute for silver in solar panel production. So that's about it from my segment. I will be live streaming every day next week, so you can catch me basically every day. Good luck in the markets. If you have any questions, you can also find me in the A1 Trading Discord. So that's about it. FX James coming on after me. Have a great weekend. I will see you in the next live stream. Goodbye.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. How's everyone doing? Hope you're all well. Happy Friday. What a week it's been. We've got the new Fed, new Fed chair, and we had quite violent moves over the past 48 hours. Even into this morning, it was relatively volatile. So yeah, I hope you guys are doing well. Hope you all stayed safe. Bashi, hello. Congratulations on getting funded. I know. So I actually wanted to just quickly show that. So this week, obviously this week, but the past sort of 3 days really were just scalping the volatility we had on the metals. So I managed to get funded twice this month, actually. So I got funded on the 20th of January and passed another one today based on basically just shorting silver into the London bearish momentum we had. So that's nice. Bear in mind, never traded futures before. So to get funded straight away is quite impressive for me. You know, I'm give myself some props there. But yeah, so that's pretty much it from me in terms of any updates or trading related things in my personal life. But yeah, the markets have been quite crazy. So we liquidated Euro Australian. I think that was either yesterday or the day before. I can't remember the exact day, but we liquidated somewhere down here just before the volatility hit yesterday. In terms of positions, New Zealand dollar Swiss is still running quite nicely. Pound Australian actually scaled into this one, also running quite nicely. Used the upside on the the downside on the Australian dollar to add into the position because I didn't see it as a sustainable move. So what we saw yesterday, I wouldn't be surprised if we get a relatively quick correction. We could see it continue lower, but the correction that I do expect, I think it will be quite smooth. I wouldn't expect it to be, one of these times where we have a large market move and then it just slowly and choppy drift and sort of correct that move. I don't expect that. I think it's going to be relatively quick and clean. Just to actually expand on that, the reason I was happy to, the reason, does that make sense? I'm not sure how to connect those 2 points. Anyway, the Australian dollar is driven heavily by commodity prices. So when gold, silver, copper were weakening yesterday, it obviously affected the Australian dollar in turn. So I also went in for an Aussie Swiss long, and we are also short on the Euro Swiss. But yeah, that's it really. So Aussie Swiss is pretty much break even. Pound Australian's doing really well, and New Zealand dollar Swiss is also doing quite nicely. But yeah, that's it in terms of open positions. The New Zealand yen is doing okay. I'm a little bit annoyed I didn't manage to get into this one because I've missed it twice. So where's the fib? Hold on, let me get my bar back here. So I was looking right here on this 50% retracement, the 61.8 retracement back into previous structure. I was contemplating it, but I was just too hesitant and missed the trade. So then I was looking at this one here, from the new low to the high, which at the time was around there. Now, as again, we saw a lot of volatility, I was tempted, but it was one of those moments, is this going to be a larger crash or a larger move to the downside? I'm going to enter and it's just going to go straight to stop loss. I'm not really willing to take that risk. So I avoided it and missed the trade again. So 2-0 to New Zealand yen. I have a short-term trading strategy. Yes. So someone asked me about that this morning, actually. So the VWAP strategy, I've made some videos on the VWAP strategy. So I passed the first 50K account using that strategy. But to be completely transparent, the second account was pretty much just trading momentum. So what I did to pass those accounts really was just trading gold and silver. So if we go down onto gold on the 1 minute, over sort of, hold on, let me find it. Yeah, sort of here. It was a case of going down to the 1 minute, waiting for these pullbacks to these moving averages. Again, it was violent, especially on higher timeframes. So I was confident to just add in, just milk as much of this move as possible. And I continued that again this morning and passed the account. So yeah, that was really all it was. I can't give you any tips or tricks or any source on that because it was purely just following where the market clearly wanted to go and where the momentum was heading. Thoughts on oil? Interesting. I don't really have anything on oil, actually. However, seems to be doing quite well. Let's see his Edge Finder. No bullish or bearish reading for oil at the moment. So immediately that tells me that personally, there's no trade here for me. However, the technical is looking quite nice. Really nice moving average formation. Very typical sort of bullish trend behavior. I've lost my, hold on, let me just get my brush back. There we go. It's a shortcut and I've got the muscle memory. I keep having it closed. Anyway, yeah, so the bullish trend is still very, very healthy. Relatively clean pullback to the 50 moving average. However, I think if I was to be a buyer, I would need to see a bit of a larger move to the downside, a bit more of a substantial correction towards the previous high here. That's a terrible box, but there you go. It would line up somewhere around the 61.8 pullback, the fib level. So that's what I'd be looking for, is something like this. That would also be a really nice move back towards the 200 moving average for a dynamic support bounce here as well. So yeah, pretty sort of straightforward. But again, oil isn't something I track too much really on the fundamental side. In fact, rarely I'll look at oil unless I'm looking at the Canadian dollar. So yeah, I'm not really sure what's going on with oil right now. So unfortunately, I can't give you too much info there. Sluggy, good to see you, my friend. Hope you're well. I've been holding gold since 398. I'm assuming you mean 3,980 and not 398. Let's just have a quick look. Just bear with me for a second. So what was it? 3980. Yeah, I mean, to be honest, if you've been holding since here, just trail stops. Let that beauty run. However, if you've been holding since 380, like you said, then that is kind of crazy. I mean, I'm going to assume that's not the case. But yeah, in situations like this, you've got multiple options. So personally, I would be looking to potentially just trim some of the profits and look to reallocate. So if you, again, let's say it's down here at 3,800. So let me just think about this for a second and get rid of that. So yeah, I'd be trailing stops underneath these sort of major either H4 or daily swing points, whatever time frame you sort of use to manage and execute positions, something like this, and just trail these stops up slowly. And then as you secure profit in this area, you could reallocate some of that risk into scale in positions. Now, I'm not telling you to do this. I'm just saying this is one way to sort of maximize these long-term trades. And it's basically, obviously, let's say you entered here with a stop loss here and you managed to catch a huge runner, and this stop was initially, let's just say 1%. Rather than just leaving this here and just trailing stops, sure, that's good. If that was the case here, you might be in, you know, what, like 5, 6, 7% profit. Just reallocate 1% of that back into another entry. And then again, if gold does end up running to 6,000, like a lot of the banks do seem to think, you've essentially not doubled the outcome, but you've maximized that move. Now, of course, you need to layer on your own analysis and management and all those types of things, but that's my 2 cents. What EMAs are those on your chart? These are the 50, the 100, and a 200. These, I only really use these just for an objective way to view the trend, because when you use just higher highs, higher lows, lower lows, etc., it becomes a little bit too discretionary, and obviously the markets are never perfect. So you could have a higher low in the opposite trend, and you know, not the best. German 40, he's talking about ETF. Who's talking about the ETF? Okay, right. So the DAX, I don't have anything for the DAX either. Again, let's just see Edge Finder. Yeah, nothing for the DAX there. Now, generally, I think the best way to look at the markets like this, so the S&P, NASDAQ, DAX, generally is to just buy. Look for buys as a base option. That should be the first port of call. The only reason that would really switch is if there is an obvious reason. So if there's a massive risk-off regime, something's happening within the economy to warrant selling, then fine. But again, generally speaking, when we don't have a situation like that, the best idea really is to look for buys. Now, again, not financial advice. I'm not telling you to blindly buy these markets, but if there's nothing on the Edge Finder and the technicals are looking fine and there's nothing that is causing concern, generally you'll be okay in a buy position unless you're stuck in a range. So to be honest, this actually looks okay. So potentially a long position. You've got a couple of different options for a stop here. Either and then essentially just have a trailing stop. And that's another beauty of these markets, really, is because we quite frequently create these new all-time highs. You can really just have no take profit, trail stop, and just let it run. So yeah, I think something like this actually makes sense. We've had a really nice break here. We've had this retest, also still in a bullish trend. Nice wicks to the downside, and it seems like some buyers are getting interested on this current H4 candle. So yeah, that's my technical view. Again, not really that interested in the fundamentals. There's nothing that's caught my eye there. Fully skipped over your comment. Which comment, Bashi? Oh, I'm on the M1. Yes and no. Generally not. The only reason I was on the 1 minute was purely just to catch the volatility and participate there. When I'm trading the VWAP, it's normally on the 5 minute maybe the 2 minute. But yeah, I normally avoid the 1 minute again, unless there is something that I'm specifically trying to do on there. How about UK 100? I think the range gets broken, it moves upside. Yeah, the UK 100 has been doing quite well. Let's see. Stay in here. Yeah, I mean, I'm not really a fan of the UK and the FTSE and things, but I can't deny it seems like quite a simple trade in terms of we would really just need to wait for a break of this level, retest, and then look to go long. All I would take caution with here is this previous high. What you don't want to do is see this formation where we break and retest, and then we end up just double topping here and then coming back down into this range. There's not really much you could do to avoid that. Obviously, if you get the break and the retest and a confirmation, then fine. But just be aware that that is a bit of a risk that we could just double top and again, return back into this range. So beyond that, let's see, what do we have over here? Selling momentum on the 1 minute does work. I know it's fantastic. That's the thing with, again, yesterday, because it was so strong, it was a case really, and I didn't execute this perfectly. That's not what I'm trying to say. I could have made significant amount of money if I was, well, maybe, yeah, if I just executed a little bit better. However, the idea really yesterday was because we were obviously having a, I don't want to call it a crash, but let's just call it a mini crash for argument's sake. It was really a case of selling, trailing stops quite aggressively, selling again, trailing stops, selling again, trailing stops, and just maximizing all of this and not really doing anything other than obviously taking profits when you're satisfied. So in times like that, yes, the 1 minute I think is really, really ideal because you don't have to overthink. You can just sell or buy in the direction, use a tight stop. If it reverses, fine, you've taken a small loss, but yeah. Rip gold am I called? Yeah, I mean, I wouldn't say rip gold or rip silver or anything like that. I'm actually looking to be a buyer of silver specifically. But yeah, I think, as I said earlier, I wouldn't expect this to be a huge deal. I don't think we're going to end up seeing silver back down at like 40, 50, 60. I think it's more a case of we had a little bit of profit taking. We had a little bit of a risk off move, a risk on move here. And yeah, that was it. It was just an opportunity for some profit taking, but yeah, not a big deal in my opinion. I could be wrong, you know, that we could see silver just crash down to 50, but again, I would highly, highly doubt that. James, I think it's a hard profit taking sell-off, so that's why today I was just waiting for another drop. Yeah, that's exactly it. Yeah. So selling introduces selling in times like this. But yeah, now we're starting to see a little bit of rejection. I mean, we had large wick here, two large wicks here. I think if we were going to see it continue lower, it would have happened by now. I think this candle, and you know, again, in a week's time, I could be eating my words. It could look really stupid. But I really do think that if we were going to see this market continue to run lower with the same aggression we saw, it would have happened on any of these three attempts. But yeah, we'll see. Only time will tell. But the fundamentals for gold and silver are still the same. So yeah, I did good on my silver trade, which I was in 4 times. First 2 times I trailed SL very tight, got kicked myself out in profit. Well, I think that's the best way to go about it. When you're trading purely just volatility and momentum on low time frames, I think really that is the best approach, because especially with like gold and silver, there was no telling really exactly where it was going to stop. You know, you could have drawn these levels on higher time frames, but as you can see, especially on the 1 minute, it's ran significantly beyond those. So yeah, what about gold? Yeah, I mean, that's it. I would maybe consider actually being a buyer. Now, again, there is a lot of concern around that, because you could see this run lower over the next week, and it just grinds lower and grinds lower. However, as I said, I would really doubt that's going to be the situation. Nothing's hurt. So the way I'm looking at gold, nothing has changed. The only thing that happened was some profit taking. The trend is still very, very healthy, and I think this move was actually quite seriously needed. So at this point here, at the high, we were very deviated from the 200 moving average, the 100 and the 50. So it was just a mean reversion, profit-taking move. The RSI is becoming a little bit oversold. We're back at sort of the averages. So yeah, and again, the fundamentals in my view haven't changed in any way enough to sway me away from being a buyer. Any comments on dollar yen? Let's see, where's dollar yen here? Being a buyer makes sense. So I heard Marco say that, was it Ivan that sent a long signal? I quite like the idea. I think it's a little bit risky, but it might be worth the reward, especially if you manage to buy down here near this daily 200 moving average, because the rejection was perfect. So really nice sort of correction, again, back to 200, sort of a mean reversion move. RSI became oversold, really smooth, almost perfect rejection off the 200 daily moving average. And now we're kicking back to the upside. We've got this gap, and we've got this sort of impulsive candle here that could, or very likely will see a correction into. And the fundamentals haven't changed. Again, dollar yen is still at its core a very bullish market, especially with the carry trade dynamic still in play. So yeah, I wouldn't overthink dollar yen. If you're a long-term trader, this could just be a dip to buy on. If you're a short-term trader, take a little bit of caution, but I do still think the bias is to the upside. I was on the 30-minute, James, looking for a swing geopolitics lined up with it, and manufacturing push from the USA was new for me. I did 66% account growth. Wow, fantastic. You are AUD shorts? Yes. So I'm a little bit salty about that because we did liquidate our position. In hindsight, could have held. I mean, we do still have a larger target. So I'm looking for this left side here to get corrected. I would like to see a bit of a cleaner pullback. Now, I may have missed the opportunity, obviously, on this move here, but I really wanted to see a pullback into this level of structure, retest, come to the 200 moving average, and that would have been almost a perfect sell for me, but we obviously haven't had that. However, on the other hand, I am obviously in the pound Aussie scale in, so that's sort of making up for it. Aussie Swiss is now in profit. In fact, all the trades are doing very well now. So yeah, I mean, Euro New Zealand also looks really nice. Euro dollar seems to be wanting to have a little bit of a correction of this left side as well. So I think the dollar is still in a bit of a precarious position. However, we've got clarity on the Fed now. And again, the other Euro pairs are quite significantly bearish. So we might see something even just back towards this 200 moving average, and that might be an opportunity to be a buyer if you are fundamentally bullish. I think the Edge Finder had a bullish reading, actually. Is it still there? It is. So Euro dollar has a bullish reading of 6. So I wouldn't be looking to buy Euro dollar here. I mean, you could. For me, it's a little bit too aggressive. Again, you know, I'm a big believer that these sort of impulsive moves do tend to get corrected. So I would really want to wait. And as I said, come back down to this 200 moving average, correct some of this left side, and then potentially continue higher towards 1.2. That would be sort of the base case. What's my entry strategy on gold? Same as it always is. Just wait for the fib pullback into the trend level of structure, and yeah, that's it. Oh, an Edge Finder reading, of course. Gold changed a bit since last week. It initially had several small candles that moved up slowly, but then suddenly large candles. Yeah, I mean, again, I wouldn't overthink it too much. I think at its core, it's still bullish, and it's still a very clear buy. It's just sort of navigating the noise or the volatility we had. Am I still in Aussie New Zealand? No, I liquidated that at break even because it was just sort of bouncing around and between the entry and drawdown. So I just cut it because I wanted to reallocate somewhere else that was going to pay, which was Euro Aussie. In total, which trades am I in? I'm in New Zealand Swiss, Pound Aussie, Australian Dollar Swiss, and Euro Swiss. James, why do you refer to yourself in plural when talking about your trades? Do you have a team? Yes. So Elite Traders isn't just me. So we've got a Series 7 licensed fund manager. He works alongside me. We've also got an analyst that went to LSE. He works alongside me, and we've actually just hired another trader that we taught in Elite Traders. So he's now on our team as well. So when I say we, or we closed this, we opened this, we did that, I'm talking about my team at Elite Traders, not in terms of, you know, I'm not saying that I'm multiple people. Hopefully that makes sense. I may get into gold, silver, platinum. Wait, hold on. I might get into gold, silver, and platinum. Silver and platinum got 25% discount at the moment. I see what you're saying. Okay. Long darks, very nice. Sluggy. Yeah, Bashi, I think the metals are a good play. It's just a case of more of a money management perspective rather than a technical strategy. So I think being a buyer, if you have the capital, basically just buying these dips is a really, I want to say smart idea. It's maybe not the best way to word that. I think it could be quite a fruitful thing to do. However, again, a lot of brokers, you know, even a 0.01 on gold can be quite significant for most people's capital. But if you can afford it, again, not advising you to do this, but look into it potentially. It's quite a good idea. I need to be very careful when I'm saying things like that. The last thing I want is to sit here and say buy silver on dips. Someone buys 0.01 every 5-minute drop and then blows their account and blames me. So that's why I like to just preface that I'm not trying to advise you to do anything like that. I'm just explaining my thought process and the way I like to approach these things. I want to make a team. Me, Ball, Lee, OT can be a spectator. What do you mean by like a trading team? It's crazy how gold 1 hour candle has the same candle prices a few weeks ago. Daily candle a few weeks ago. Oh, right. Okay. Yeah, I see what you mean. Yeah, this is the thing. So it's the same as sort of theory, or not theory. It's the same sort of thing with like the S&P, the NASDAQ. You can end up sitting in these positions for days to weeks, and then 50% of it is reversed within 24 hours, maybe less. Because we've had so much buying volume, it's like, okay, we're buying. And then it's like, okay, someone's going to take profits. More people are going to take profits. More people take profits. And then it just ends up in this waterfall, which is obviously a significantly larger downside than what we had upside in terms of amount and time. Elite Traders, yeah, it's really solid. Yeah, I mean, yeah, I'm very fortunate to have a very knowledgeable team. Just thinking a tiny 0.5% exposure would allow funds to scale and allow for deeper drawdown. Yes. I bought my calls at the very bottom yesterday's dip. This trading stuff humbles me so hard. Yeah, I saw a lot of people actually on Twitter yesterday. They were on like the H1 and they were showing this bottom here at the time. And they were print screening up here. And I was just looking at it this morning thinking, oh my God, I really hope they realized those profits, because if they didn't, they've been wiped, because there was large positions a lot of these Twitter traders were taking. Yeah, I mean, I would highly encourage a lot of you, if you are newer to trading or you're not quite where you want to be, to really network with other traders. Obviously, I'm not saying that you would network with every trader you see, but traders who align with your style, what you believe in. So whether it's fundamentals, price action, whatever. And it really, really speeds up the learning process. So for example, when I started trading, I wasn't sat here on my own trying to sort of figure out what NFP was, or, how to define trends. I was talking to people. I was on Instagram, Twitter, talking to family, friends. I was, networking with people that knew more than me, that I could learn from. Because the problem is when you isolate yourself and let's say, I'm going to take ICT as an example. I'm not actually attacking him in this situation or in this explanation, but when you sit there with one type of content and you're not talking to anyone else that's outside of that bubble, you become sort of infatuated and married to that idea. So for example, I might have had some sort of theoretical strategy that I wanted to try and waste weeks back testing. Whereas someone that, if I spoke to someone that knew more than me, they could say that is a terrible idea. It doesn't work because of this. That's just saved me 3 weeks of back testing. You know what I mean? Or at least something to consider. So anyway, let's finish that conversation because my time is almost up. So in terms of trades, I'm not really looking to take anything else. Euro New Zealand looks quite attractive. So if we can see a pullback on Euro New Zealand, that might be another one that I could potentially take. So just to mark this up for you quickly, it would look something like this. And as always, we need the fib to line up with previous structure. So that pull back in, retest the minor support we had here on the H1, just have a little bit of a reversion to these moving averages, then get short looking for a continuation to the downside. I think that's quite a smooth, easy idea. New Zealand yen, I do quite like it, but obviously I'm not going to buy here because we're double topping. So I'm not going to look to be a buyer just yet. I would really want to see just a reasonable pullback and then potentially continue higher from there. So as long as the low on, well, if we get a pullback, the low would obviously need to be higher than this one. We need to see a break. We need to see a retest of these previous highs and then a continuation to the upside. So there's quite a few things I would need to see from New Zealand yen to validate an entry, but it's on the list because I quite like it. Feel free to attack ICT. That was 2025. I'm not doing that this year. Anyway, ladies and gentlemen, we have got Alan Perez coming to take over the show. So don't leave. Alan is a fantastic trader. Really good content actually recently. I've been watching some of his shorts. They're really well edited. So guys, have a good one. Yeah, I'll see you later. Stay safe. Enjoy your weekends and don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good afternoon, wherever you guys are watching. Good to be back here. Hello to all the regulars. We're seeing some price action. I'm sure the gentleman here this morning covered it for you guys. But we do have gold down almost 7%, and silver just keeps on chugging lower. I posted an update here on the Telegram channel, so definitely feel free to join that. I'll give you guys the latest there. And I'm going to go over today about the DXY because we are getting a slight bid here on the dollar. And the question becomes, what do you do from here? We're up against this level of resistance, what could be now support, if we break above this level and continue there. So my thoughts on this, well, I think the dollar supported by a couple things this week. You do have the supposed government shutdown is not going to happen. I think Senate just needs to go ahead and vote something in there. You also have Kevin Warsh here as well as a new Fed that was announced. Now, both Kevins were considered dovish, but in the past, Warsh was actually a little bit hawkish. But now he's leaning more dove camp. So I think the narrative is still 2 rate cuts for 2026. And then any comments, any interviews, I'm sure people are going to talk to him, just picking out some wording there for him and kind of get a gauge as to where he lies. But you have to remember also, he's only one out of the many board seats on the Federal Reserve. So it's not like just Kevin hops in and there's rate cuts if Trump wants. It's he still has to influence the other people. So that's another thing to think about. But also gold is getting some profit taking, right? We're almost down here now, 7% for just today, actually, a bigger drop than yesterday. And so why is the dollar getting a little bit of a bid? I think because there's just some general profit taken in gold. Which is, understandable, right? We were at the very at 5,600. We had a crazy monster run up. Same thing with silver. But if this is purely just profit taking, this kind of just shows me how sensitive gold was at these levels, right? Because we had that first wave of profit taking yesterday. And then if we, now looking at today's price action, another day of profit taking, look at that big drop. So prices were pretty sensitive up there. So that tells me if we were to get some kind of a cooling theme in as far as geopolitics go and things of that nature, then this thing can definitely slide a little bit lower, which is fantastic for people that are been on the sidelines. I know it's been a very painful thing to see if you're not involved in gold right now, seeing this thing just chug higher and higher without you. So levels that I'm looking at for gold at the moment, something like this catches my attention. Another thing, this as well catches my attention, which is almost, relatively there, give or take. If I put some moving averages on there, well, this red line here is aligned with the 50-day moving average. So maybe this 4,600 level is a good level, right? $1,000 off from the recent highs. So that's something to think about there. For gold as far as a pullback opportunity. Now, I'm sure this promotes the thinking of, well, is gold crashing from here? Is it now time to short? Yada yada yada. I think the landscape still is fundamentally, promoting gold right to the upside. You still have central banks that are looking to cut rates. You still have geopolitical tensions. There's probably going to be another couple waves of that as well with the current president and the volatility behind his wording. So yeah, I'm sure gold is going to get another hit of a flash higher, right? But I think, the deeper the pullback in the short term, the better. And that'll boost the dollar and that'll give us some opportunities to go ahead and play it. So kind of what I'm looking at for gold here. We did have, what was it? PPI come in today for the US. It came in hotter at 0.5. I want to make sure I get the numbers right here. US PPI came in hotter, right? So that's actually, inflation ticking up a little bit, right? So that gave the dollar a little bit of a boost, right? That's another factor to the gold downside. And you see DXY up 0.65. You have dollar yen almost up 1%. You have dollar Swiss up, so we're getting these pullback opportunities. Actually, dollar Swiss, something I like about dollar Swiss, right? If we're going to continue with the play of shorting dollar longer term, I'm actually looking for dollar Swiss to get a little bit of a bump here. Maybe we find ourselves back at this level of support. This was a very established level of support for a very long time, right? 1, 2, 3, 4, 5, and the sixth time we broke right below it. If we were to get up in here, I wouldn't mind actually shorting dollar Swiss. The only thing that kind of keeps me hesitant on that is the swap cost on that. But, if we get these, rate cuts coming for the US, maybe by the time we get here, that'll look like a good opportunity. Because if you look at last time, right, this was, I'm going to give you guys a little history lesson on dollar Swiss. This is dollar Swiss. This is a weekly time frame. Now, the current level of support that we broke was not as established as this one, but this is the weekly time frame, dollar Swiss, 8,400 level, 0.8400 was a very strong level. We held it once, twice, 3 times. We ultimately broke below it with some force. Kind of resembles what happened just now. So I'm going daily time frame here. We held it 1, 2, 3, 4, 5 times. We broke right below it. But also, what you have to look at is whenever we did break this level, right, on that weekly time frame in the past, we retraced right back into that level and then continued lower. So what I'll be looking for is if we can get dollar Swiss to trade back up into this level here. And then if the landscape, the macro, everything aligns with the idea, I'd actually be looking to short it here. Now, because the swap costs are somewhat heavy at the moment, then I could have a very short-term time horizon. But if you just look at it, dollar Swiss, whenever it starts moving, it starts moving pretty fast, right? Like this leg down was only 1, 2, 3, 4, 5, 6, 7 days, right? 7 days for, let's see, 7 days for 328 pips. So not bad, right? I'll take the swap cost on a couple days, right? A week. So we'll see. I mean, even this recent leg here, 1, 2, 3, 4 days, right? 4 days. And we went down, again, 354 pips. So I wouldn't mind actually seeing a little bit of a tracement up in dollar Swiss and then get the idea of shorting it here if the fundamentals make sense. Obviously, I'll be looking at the edge finder for guidance. I'll be looking at the real yield. I'll be looking at all those metrics, the eagle surprise meter to make sure that it makes sense. But something I'm looking to do, one thing that I'm currently in, a current trade that I'm in, is the euro dollar. So I got in this thing pre FOMC because I did think that the Fed was going to take a somewhat neutral to hawkish stance. I think it was more neutral than anything. So the dollar really didn't see quite any movement there. We've been stalling out here. The trade is slightly in profit, but essentially what I did was a 1-to-1 trade. So not the best risk to reward. But sometimes those are the better trades. So what I did was market order, stop loss here, and I'm ultimately targeting that 17800 level here. So we're slightly in the green here. So I'm looking to target here. The reason why I'm not super my take profit is not super deep here is because I do think that fundamentally the dollar is going to continue on that path of weakness for now, at least, right? Lots of volatility, lots of geopolitical uncertainty. Sell America theme can come back at any moment. So that's something I have to be careful with. So that's why my time horizon and my take profit level is not too far away. It's only about 100 pips away. So once we get to this level, I'll obviously reevaluate. And if the data supports that we continue lower on euro dollar, then I can just find a way to re-enter, right? But ultimately, I want to get out here, be careful, and then also see like if I want to trade this thing higher or lower. If I want to trade the dollar to the downside, I think we have better proxies of doing that. If we get this strong bid in dollar, then obviously gold will resemble that by going lower a little bit. Maybe we get into this level of support. One thing I would be really looking forward to do, and I've been saying this for many, many times here, but I would like to take a stab at the Aussie dollar. Aussie dollar benefits their exports from gold. So when the gold rises, Aussie dollar also rises. Same thing with New Zealand dollar as well. So if we were to get a pullback in gold and establish a long opportunity in gold, I would also like to take a long Aussie dollar position too if we get a pullback. Central bank for Aussie dollar still looking to hike rates while the Fed is looking to cut rates. So that obviously supports it. I think we're just a little bit overextended here. So I would like to wait for a pullback of some sort. This level of resistance seems to be like a good level. We almost got there on the Aussie dollar, but not quite there. So really interesting to see how this plays out. But for now, my current trade is in profit. We're looking to take profits here at that 1.1800. And then once I get out of that, I'll repivot and I'll be looking to reallocate in an Aussie dollar long position if it makes sense. One thing I'll be looking to look at here as I do that is the edge finder. So let me see what the majors are doing only. Yeah, I mean, look at that. Aussie dollar still getting a very bullish reading, 11, Kiwi dollar 12, sterling is 10, euro dollar 6, and the dollar pairs are still getting a bearish reading. So as long as we continue to see that, I'll be looking to look for that short-term bid in the dollar, but ultimately fade it. Yeah, GU's at 10, man. Good question. Would I long dollar Swiss towards that resistance level? You know what? I wouldn't. I'm going to say no at the moment because the dollar Swiss, whenever it catches that safe haven that attractiveness for safe haven status, it really, really moves against you really, really fast. So I think the best way of doing it is just shorting the euro dollar, right? It kind of tracks the dollar basket a little bit better. And then I'll be just waiting for dollar Swiss to kind of chug up higher here. You can see that, for the most part, like dollar yen's really, really catching some steam here, but dollar Swiss is still somewhat relatively low. So ideally, I want this level here, but the reality is I don't know if we're going to get all the way up to here, right? Maybe as well, Ulfmain, a level could be something like this, right? Maybe we get up to here and then short it here. So that's why I'm not looking to necessarily go long dollar Swiss, because volatility can really heat up if the US-Iran thing escalates, right? Or if you continue to see like oil just popping higher, which, I mean, look at that, it's still high. So still kind of hinting to us that there is some uncertainty pricing in some global supply disruption possibly, right? So if you were to see dollar Swiss like chug up here, but then something happens, right, in the landscape, like you get some kind of a freaking attack or something, right? This thing can really just kill you really, really fast. So that's why I'm pretty hesitant on not longing dollar Swiss. The better play, the more safer play, it's a little bit slower, but it's safer, will be the euro dollar. Dollar Swiss really, really moves fast. Same thing with dollar yen too. Like if you get a safe haven attractiveness, like a lot of things going in that direction, then dollar yen will just see another drop here and possibly hit this 150 level before buyers have a chance to repick it back up. But yeah, that good question though. Good question. I was considering that as well. I mean, the swaps are healthy for dollar Swiss, so it makes a lot of sense. It's just that recently things can really, really move the dollar Swiss to the downside, and I don't want to be caught up in that. What's with pound Swiss? So the Swiss basket, let's confirm if it's still the case, but the Swiss basket has been pretty weak here. So let's go look at pound Swiss. Yeah, Swiss basket still 0. The Swiss is in. I'm gonna take away the ZAR and the lira. Okay, so Swiss basket is the pink. Is it the pink? Yes. Look at that. I didn't even notice it. It's at the floor. So Swiss basket is pretty weak here. Pound dollar's getting a very bullish reading. Recently, they've been seeing some growth in the pound. If you look at the economic heat map, let's look at the economic heat map here for the pound, just so I can illustrate it. I mean, but you can clearly see right here, the pound is in green. Recently, we had this, it was higher for longer, and so now we're kind of just flat here. But look at the pound heat map. I'll show you. UK. PMIs were good. Services, retail sales were good. We just need for the, I mean, CPI too, right? CPI came in slightly hot there. We just need some employment figures, in my opinion, for the pound. And I think the pound will really have some momentum behind it. So, but generally, the overall outlook for pound, like 67% of the latest releases are printing, beating expectations, which is phenomenal. So definitely, look at the heat maps. This is one of my new favorite tools here. As we get more data in, I want to see how the flips and gauges translate to price action. So I remember before, pound dollar was weak, and then it really crossed to the upper end of these channels here, and then the pound really just took off. So I want to like reference this and reference the price action and see, like, right now Aussie dollar, right? You see this blue line here at the very top. It's getting strong, right? If you look at it from the 26th, right, which is not too long ago, look at price action doing just that. So this is a fantastic tool. It's more for short-term trading, from what I understand. It gives you the latest economic releases. So for any day traders, intraday traders out there that want to get a gauge for like relative strength, because you can always just pull up a relative strength chart. That's not what I wanted. Relative strength chart. Anyway, you can always pull up a relative strength chart, but that only shows you the price action. So imagine getting a relative strength chart, but for macro, like, that's phenomenal, right? So I love this thing. I love the Edge Finder. So it's my favorite tool out there. It makes data consolidation so easy. So get you guys a copy if you don't have one. It has freaking changed my trading for the better. I love it. And there's always new updates too. So that always makes things super, super helpful. Let's look at the carry trade scanner, see if anything has changed. So you were looking at pound Swiss, Bashy. So pound's getting a strong reading. Of course, if you look at the top status page, pound dollar in itself was getting a like 12 or 14 reading. And then you have the Swiss as well, the Swiss basket doing pretty bad. So you do have the actual swap rate for pound Swiss to the long side is pretty healthy here. So I think that's a good trade, Bashy. If you're in that thing, congratulations. Let's go ahead and look at the actual, this is the features. Give me 1 second. Let's look at the actual price action. Pound Swiss. I mean, honestly, technically speaking here, if you can somehow get something here, which we were kind of in this area already, this looks like a good opportunity. And then the recent highs here. Okay, this looks pretty good. I think we can be patient. Maybe get a little bit of a dip here in the pound, ultimately pick it up here lower. The reason why I'm kind of hesitant at the moment is because although this is pound versus Swiss, there's always in these, this is what's called a synthetic pair. So in order for you to make like a pound Swiss pair, you have to combine pound dollar and dollar Swiss together. So there's always a slight underlying factor of the US dollar. So if we get a little bit of a dollar bump here, then I can actually see this taking a little bit of a hit, and then you get a more attractive level. That's one approach. You could also say, hey, I'm going to enter this here and just have a wider stop loss to accommodate for something like that. Perfectly fine as well. There's different ways you can approach this, but I think this is a great trade. Edge Finders, like, let's see what the Edge Finder is saying on the actual miners too. Let's do miners only. Getting a 6 reading. Okay. Retail's heavily long, so that's a contrarian signal, but it's not set in stone. So you just use that as you wish. Seasonality is in favor for the pound Swiss. COT, they're buying up the pound. They're taking off the Swiss, which is great. So the COT, this triangle here, is the change. So recently here that people picked up the pound and sold the Swiss. So it looks like a good trade in my opinion. Not bad. Pretty good. No, not bad. And it can always get better from here. Let's see if next week there's any financial data for the pound that we can look out for to see if this will give any fuel. That's one thing that I like to do too. Like if the overall picture for currency is looking pretty healthy here, and I know that next week, like for example, the dollar's looking pretty well. I'm picking it up here, and I think there's a little bit more room to squeeze up higher. I'll look at the economic calendar and see what the expectations are. And for the most part, the analysts, whoever comes to the conclusion that there's going to be a slight miss or slight beat or whatever the outcome is, they're pretty smart. You never really get these like insane massive drops. I mean, it happens, but for the most part, I like to position myself a little bit early to catch that momentum. If I see that the data, forward-looking data is looking to be a little bit better. So let's look at UK here. So on the 2nd, which is next week, let's look at that. PMI is looking to come in flat. Manufacturing coming. Oh, that's French. Sorry. Let's say I want to see something UK and also Swiss as well because it's pound Swiss. Swiss retail sales. There's no outlook yet for that one. French CPI. That's French. UK. Okay. UK services PMI on the 4th is expected to be flat. PMIs are flat. Yeah, so that kind of gives me some hesitation. Okay, BOE, they're staying, but the rate statement is going to obviously influence that. Yeah, so not much coming out for the UK besides that rate statement and their PMIs. Obviously, you get a surprise, beat or miss, then that can actually help. But let's look at let's reference manufacturing PMIs. So it's expected to come at 51.6. And then let's compare it to what the landscape is showing now. So if I go to, and this is what I do all the time. So macro scanners, economic heat maps, UK. Manufacturing PMIs right now is 51 point. It's actually 51.6. So if it's, that's flat. So it really wouldn't impact it much, right? What was the other release? It was a UK services, I believe. Where are you at? Come on. BOE. Okay, UK services, right? At the moment, previously was 54.3. If it comes out to 54.2, not the biggest change, right? So unless you get something crazy beat, then pound will pretty much stay flat. So I'm going to wait for a little bit of retracement. If I possibly can, I'll wait for a little bit of a pullback if I were to enter this trade long. But right now it's pretty good, right? You could also do another approach you could do is take one position. Like let's say you want to risk 1% on the trade overall. Then you just take 0.5% here. And then you're willing to take another 0.5% here. Best case scenario is that you enter, you get a little bit of drawdown, and you get tagged in the lower position. And then your average cost basis is actually improved. And then, you're gravy, right? And then you can continue playing the thing long. And then if you get stopped out, ultimately, then whatever. But I think that's a good approach. So that's what I would do for the pound Swiss here. But yeah, I like to do this a lot. I like to kind of like, if I'm looking to get in a trade, I sometimes like, especially with Forex, right? Because Forex is pretty flat for the most part. And then when you get these data releases surprising and stuff like that, that's when you catch the big move. So if I like to look at the landscape, reference what's going on, right? If you're seeing an inflow of US data and expected to come in pretty good, I like to reference what the current landscape is looking at for the US, like the current US heat map. And then see like, okay, well, how much of a difference will this make if whatever comes out comes out correct, right? And for the most part, the analysts do a good job. And so then I can catch those moves a little bit, be in there a little bit prematurely. And then to account for that, any risk of like, it flopping or whatever, then I just, wide stops, lower risk, whatever. But that's basically like how I would play upcoming data releases. Yes, I forget you're using the 1 minute time frame. So yeah, true. Relative strength is great, and like you say, you can compare currencies with macro price action. Yeah, man. That like I know I say this all the time, but like the edge finder is phenomenal if you're swing trade. I mean, even if you're intraday, but like just getting an understanding of what the macro or like what moves price, because ultimately like what moves price is the macro. Like when you look at the dollar index, when you're or like any pair, when you're seeing these big moves, it's because of something, right? Like it's insane, but that's what it is. So definitely get you an edge finder, man. It's the best. It's the best. Euro dollar too. Something interesting that I just saw right here. That weekly time frame here. If you finish that euro dollar position with like a bearish hammer candle here, maybe we can get a little bit of a bump in the dollar, bring this thing slightly bit lower. So that's another thing that I'm looking for. Now, if we close this thing green, it's Friday. So if we close this thing green, then I'll take my profit where I have it at the moment. That's why I'm kind of a little bit more conservative, and then I'll be looking to trade it a little bit higher. You're down 1% on gold. What's gold doing? I mean, it's still shooting lower. Look at that wick too on the weekly on gold. Where do I get in lower time frames? Nah, I mean, I really don't get in on lower time frames, really. I mean, I like the 4 hour. I like to get a gauge at the 4 hour. Like not for entries per se, but like let's say, like this right here, like if we were to just flush below, like this to me showcases that we might get support in here, right? So I might actually lose out on the trade if you get some support action coming in here, like buyers to continue it, not necessarily because of a price action thesis or whatever I believe in, but it's more so like, the trend will still be intact to the upside, right? So if you get buyers come in here, then technically speaking, you're making higher highs, higher lows. So, the trend, the short-term trend or the intraday trend, whatever you want to call it, it's to the upside. So what I would look for is if like this thing fails, then perhaps we just start, filling the left, right? Just filling this recent move up, and then you just reevaluate. But as far as entries on lower time frames, not really. I mean, I like to use the daily. I'm pretty flexible on my entries and stuff, and my exits as well. So I just like to get in when I see like this thing starting to potentially flip around, right? And then the macro and stuff aligns with it short term. Like we have PPI today, which is inflationary for the US. There's a lot of things going on. You have oil elevated as well. Could cause some inflationary pressures. I mean, still relatively cheap, right? Relatively cheap, but something to think about. Long gold at 5,000. Let's see. I mean, definitely could, right? So like this thing keeps chugging higher. I'm looking personally for 4,600. I think 4,600 is a decent level. That 50-day moving average is pretty much up there. So by the time this thing, or if it gets up to here, then the 50-day moving average will definitely line its way up into here, and that'll be a good, entry to go ahead and go long again. I like that level a lot actually. It's $1,000 off. You're getting gold at $1,000 off relative to the recent rally, which is pretty good. Hey, Cheryl's happy weekend. Let's see any chart requests or anything like that. Let's see what equities are doing. Equities are still yeah, I mean, we're lining up at that 50-day, but this 50-day moving average seems to be holding up. I remember before I was talking about this, but like when we were below this 50-day moving average that we closed, I was actually pretty convinced that we were going to get finally a kind of a retracement back up into this 6,500 level of support. But no, I mean, we traded below it, closed below it, solid candle too, and then we just traded higher. Same thing with this candle as well on the 20th of January. So it seems like this 50-day moving average is looking like or reacting as a strong level of support. Ultimately, though, if we were to get a decisive close below and a continuation, like maybe 2-3 consecutive candles of below that 50-day, then maybe we can get a short-term pullback into the 6,500 level. This is kind of It was really concerning to me at one point, but I mean, we're getting a rotation from tech into the broader market, so that's healthy. But what's kind of concerning me was just how we kept chugging higher on equities, no meaningful pullback, and things were pretty tense in the world. And also too, like you had gold. Gold was like at just 2% days, 3% days, right? Erratic parabolic movement, but the VIX was relatively low, so that was kind of concerning to me. But now we're starting to see, I would say, a sign of stabilization, right? Maybe this is the pullback. I don't know. But I mean, I think the year for this year could be a solid year, like an 8%, 10% year. But is it going to be, we get to 8, 10% immediately and then we're just sensitive up there, like just stagnating? Or are we going to get a pullback and then ultimately finish the year up, 8, 10% because we made our way up there naturally, gradually, organically? I don't know. That's kind of the pickle I'm in, the boat I'm in. Chris said he will take a 1% pull, or 12% pullback, or a 1 to 2% pullback, because we had a 1% pullback yesterday. I think 12% will be, healthy. Let's see, 12% from now. That would actually be super healthy. If we can get that, that's phenomenal. Even up into this 200-day moving average, I think is okay, right? If you just, I think up into the 200-day moving average will be okay as well. You're down 6%, and then you make up another whatever, and then you finish the year slightly in the green. I just don't like the idea that we're just gradually chugging higher. That just makes me feel like markets are going to be very hypersensitive to anything. And then if anything meaningful happens, like as far as something disruptive, then you get a very hyper, like super fast pullback, which is okay. But it's not okay for like the everyday people. Like I'm sure that can cause a lot of havoc and stuff like that. But for traders' perspective, obviously any sharp pullback is much appreciated, right? You can time it with things like the put to call ratio and stuff like that to get a sense as to when to re-enter, and it's an opportunity long term. But I just don't like the sensitivity that we can experience up in these levels, right? But fantastic, we hit 7,000. AUD USD long. Yeah, I'm waiting for it, man. I'm waiting for it. It's going to take its time. Waiting for that pullback ultimately, but we'll see how it plays out. If we get that dollar strength, I'll be looking to be a buyer, but it seems like I have missed the train unless I become more aggressive with my entry, which I'm not willing to do. So yeah, Aussie dollar, fantastic trade. It sucks. I've been talking about it for a very long time. Hopefully whoever, watches my content jumped into it when I hesitated. Congratulations. But yeah, that's AUD USD. Well, one last thing before I end the stream here, guys, definitely join the Telegram channel. Free value, of course. I drop the 2 most impactful charts of the day, and I keep you guys updated with the landscape. At the moment, I'm navigating the dollar, right? We're getting a short-term bid here, but ultimately the fundamentals line up with a longer-term dollar bearish theme for now, especially with what's going on. So I'll definitely keep you guys all updated there. Free value, go ahead and join. There's also giveaways as well, pretty often, and quizzes at the end of every day. So feel free to join that Telegram channel. We'll be more than happy to have you. And any feedback or anything like that, just feel free to reach me on Discord. I'll be more than happy to improve any way I can. But with that, I wish you guys a fantastic weekend, guys. Trade safely. Gold's moving. We're getting some movements, potential opportunity. But yeah, have a blessed rest of your day. Cycling Club, I agree with you. The Telegram is fantastic. So go ahead and join, guys, if you're not in there already. All right. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.